Hello, everyone. Welcome back to the ninth episode of ChatGPT versus Gemini Quant Showdown. In this series, we give two top-tier AI models a starting capital of 1 million to see which one will come out on top as the true AI stock-picking champion. First, let's quickly recap the current standings. As of this week, our old friend ChatGPT's simulated account has achieved a cumulative return of 14%, which is quite impressive. But what's even more astonishing is Gemini, whose cumulative return has soared to 19%. During the same period, the benchmark S&P 500's return was 10%. That's right, both AIs have outperformed the market and achieved excess returns. Gemini, in particular, has an excess return of 9%, with its cumulative return being nearly double the S&P 500 performance. So how do they do it? Let's take a look at their holdings from last week. ChatGPT's portfolio included familiar names like KLAC, Meta, Microsoft, Amphenol, NVIDIA, and Netflix. Except for a slight loss in APH, all other stocks were profitable, especially NVIDIA and KLAC, which posted stunning gains of 22.76% and 18.85% respectively. Meanwhile, Gemini's holdings included NVIDIA, Broadcom, Meta, Carnival Cruise Line, Boston Scientific, and Microsoft. Aside from Meta and BSX, which had about a 3% loss, the rest were in the green. NVIDIA was up 16.27% and Broadcom was up 12%. All right, that's the recap. Now, for the really exciting part. This week, both AIs used their deep research capabilities to conduct a full analysis of the macroeconomic environment and market sentiment, and they've come up with their new strategies for the week ahead. Their decisions are a direct reflection of AI-driven wisdom. Let's see what these brilliant minds have concluded. First up, let's look at ChatGPT. Its view on the current macroeconomy is one of cautious optimism. It believes that while U.S. inflation has recently moderated and the Fed might even cut rates later this year, which is a positive sign, new tariff policies could introduce inflationary uncertainty, so it's best to remain vigilant. Based on this judgment, ChatGPT's strategy is crystal clear. Hold on to core tech stocks, add new growth drivers, and maintain a cash position for any surprises. Here are the specific moves. Positions sold. First, it sold off its holdings in KLAC and Netflix. Why? ChatGPT's analysis suggests that KLAC has already had a major run-up this year, and its valuation now reflects most of the good news, limiting short-term upside. As for Netflix, while its fundamentals are strong, the stock has rallied tremendously and has an upcoming earnings report, which introduces volatility. So it chose to take profits. NVIDIA remains ChatGPT's top holding with a 20% allocation. It has a perfect 10 out of 10 sentiment score and is seen as the epicenter of the AI revolution, where demand far exceeds supply, the undisputed king. Microsoft and Meta. These two giants are also kept as major holdings, each at 15%. Microsoft is viewed as a safe haven in the AI space, with its cloud business and AI investments paying off handsomely. Meta has won back the market's favor with its year of efficiency cost controls and the rebound in its ad business. Amphenol. This quiet performer is retained with a 10% allocation. ChatGPT notes its outstanding results, its exposure to high-growth sectors like EVs and 5G, and a technical chart that suggests it's on the verge of a major breakout. Intuit. This is a new major addition, making up 15% of the portfolio. Intuit, a financial software company, is reinventing its products with AI agents. Analysts are rushing to upgrade its price targets, seeing it as successfully transitioning into the AI era. Uber, another new favorite with a 10% allocation. Uber has finally achieved profitability. Its stock performance is very strong, and the market views it as the turnaround no one saw coming, with the potential to become the Amazon of transportation. Cash is king. Finally, ChatGPT has chosen to hold 15% in cash. This is a crucial risk management move. It provides a buffer against market volatility and keeps some dry powder ready for future opportunities. Overall, ChatGPT's portfolio for next week is NVIDIA, Microsoft, Meta, Intuit, Amphenol, Uber, and cash. This is a classic tech growth portfolio that also incorporates a defensive element. All right, now that we've seen ChatGPT's plan, let's turn to our reigning champion, Gemini. If ChatGPT is a steady tactical master, then Gemini's strategy is more like a bold, offensive vanguard. Gemini's take on the macroeconomy is a bit more pessimistic than ChatGPT's. It sees a greater risk of stagflation, where economic growth is sluggish, but inflation remains stubbornly high. It particularly emphasizes that the escalating tariff policies will have a significant negative impact on the U.S. economy, potentially reducing GDP growth by 0.8 percentage points and leading to 578,000 fewer jobs. And yet, against this backdrop, Gemini has made an even more aggressive allocation. Here are its moves. Position sold. It sold off the lackluster performer Boston Scientific and Broadcom, which had valuation concerns. These two stocks ranked lower in Gemini's algorithmic scoring and were decisively cut. NVIDIA. Gemini's confidence in NVIDIA is even greater than ChatGPT's, giving it a top allocation of 25%. In its scoring system, NVIDIA's trend and fundamental scores are nearly perfect, making it the undisputed core of the portfolio. Carnival Cruise Line. This is Gemini's second-largest bet this week, at a whopping 20%. Gemini believes the market is still underappreciating the recovery potential of this cruise giant. Carnival just reported record quarterly revenue and profits, and management is full of confidence about the future, a massive opportunity. Royal Caribbean, a new 15% position, forming a cruise line power duo with Carnival. Gemini is betting heavily on a full travel industry recovery, and Royal Caribbean also boasts a perfect trend score and strong earnings growth projections. Applied Materials, a new 10% allocation. As a key supplier of semiconductor equipment, Applied Materials is a direct beneficiary of the AI chip boom, providing a solid foundation for the entire portfolio. Retained and rebalanced. Microsoft and Meta, while their allocations have been reduced, still hold significant positions of 15% and 10% respectively, acting as anchors in the tech sector. Minimal cash. Unlike ChatGPT, Gemini is only holding 5% in cash. This fully reflects its offensive stance. Once you've identified a winning direction, you should deploy your capital to the most efficient places. So, Gemini's portfolio for next week is NVIDIA, Carnival Cruise Line, Royal Caribbean, Microsoft, Meta, Applied Materials, and cash. This is a highly concentrated portfolio, betting on an AI and consumer recovery theme, reflecting a very aggressive stance. All right, folks, the battle plans for next week are set. ChatGPT is taking a cautiously optimistic stance, building a balanced portfolio centered on tech, with both offensive and defensive plays, and holding 15% in cash to handle uncertainty. Gemini, on the other hand, is much more aggressive. While acknowledging macro risks, it has chosen to concentrate its forces heavily in its two favorite sectors, AI and the travel recovery, with only a 5% cash position. Two completely different strategies, backed by two different AI judgments about the future. So, which strategy do you favor? ChatGPT's balanced approach or Gemini's bold attack? Let us know what you think in the comments below. And don't forget to subscribe to our channel, so you can join us next week to see which strategy comes out on top in this Quant Showdown. Thanks for watching, and we'll see you in the next episode.